Okay, traders, Stacey, Burke, continuing our discussion on just looking at our basic 50 pip models, keeping it simple, the timings, the high and the low of the day, round numbers. And I really want to emphasize just keeping things simple. If we look at, we'll go through the entire week for the pound yen. You can do this on all the pairs that you want. I want to also talk about the stop hunt and just looking at how the market moves in Asia, and then identifying where you can look to position yourself for the next 50 pip move. Now, numbers has a lot to do with that, but I just want to demonstrate as we head into Asia that the high and the low of the day are from the previous day are marked by the blue dotted line. But that doesn't prevent us from marking off the most recent high and most recent low prior to the market rolling over on Monday. As the session proceeds to trade and breaks through the previous consolidation high, we obviously have another marked level high, and we have a low of the day in place. Now, traders, pay attention. The market breaks high and hits stops, pulls back to the numbers, pushes again, pushes a third time before heading into the end of the 4-hour window. The end of the blue box is the end of our 4-hour time frame, which then coincides with our 1 hour and our 15-minute all aligning in the next block of 4 hours, as well as the beginning of the next hour. And what do we have? We have a engulfment into the next 50 pip box. So we hit stops up top, pulled back, pushed again, no follow through, came back to the numbers, pushed a third time, no follow through, before rolling back down. Now the question you want to ask yourself is, where is the next 50 pip move? There are stops below the low of the day. There are stops below Friday's US session lows. Okay, so high and low. They're inside of the previous day's overall high and low, but they are the most recent highs and lows before the market closed and pulled back and went into consolidation. We hit the stops. They tried to push again, no follow through before engulfing below the stop hunt candle, back inside of a 50 pip box. The next logical place this market will head towards is the bottom of that 50 pip box, hitting stops at the low of the day and Friday's US session lows. At the end of the next 4-hour block, so this bull candle at the bottom of that box is the third candle of the hour as we head into the 4-hour close. Now traders have gone long off the bottom here, off the stop hunt, back up, hypothesizing that it would stop hunt the high of that last breakout up top here, or at least to the numbers for a break-even trade. The market fails to get up there before pulling back down and stop hunting traders who have gone long. So it's hit stops at the top of the London Open before heading back down 50 pips, stopping out traders at the previous day's low and at the low of the day, pulling back, hitting them a second time, and traders are long off the US Open, again expecting that market maybe to go back to the highs, which it does. It stop hunts up top, but not all the way through before failing, hitting it a second time, and then rolling over, taking out the lows of the US session. That's weakness. So traders, you need to be paying attention to this in the fact that there's no follow through. The market is weakening. Every time it tries to go long, it fails. And we also have now a measuring rectangle. So traders keep asking about measured moves. Now, when you've got a high and a low that fails, and we have now a rectangle inside of this, I take my Fibonacci tool, which I just drag from low to high of that little rectangle. And again, I just want to point out, it's not Fibonacci. I've just put in 50% and 100% expansions in where the Fibonacci numbers normally would be. If you don't have an expansion tool, just do the math in your own head, the high and the low, and then one full expansion of that range, two full expansions of that range. As we head into the next day, again, breakout, pullback, fill more orders, and continue. We talk about the three things that markets do. But again, I want to emphasize each session marking off your high and your lows. So this particular Tuesday this week, the market takes out Monday's low into the close. So we actually have a continuation rather than a pullback consolidation. And this first pullback in Asia is indeed our first consolidation after the move down. Breakout pullback. So we mark off the low of the day. We have the high of the day as we head into the Asian Open. They stop on high, pull back, stop on high again. They hit it twice before failing and breaking through. So again, if we come to the session in London and the move is already underway as it was on Monday, and you weren't in that move long, you're looking, or sorry, move short, you're looking for a move off the bottom long. You may have gotten in down below, even though it didn't push right through the numbers, it stop hunted the recent lows for a move back up. When it hits the highs, you need to be at break even. So in terms of trade management, when we have a high or a low taken out, you need to move your stop to break even. That is the greatest area for a market to reverse and pull back. If it breaks through and continues, it doesn't matter. You're at break even now, moving towards either taking profits off when this market goes a second bear candle, a third bear candle, and a bear candle with a pin. You have to be exiting that trade. Same thing in the US session. We had a possible measured move with that smaller little rectangle off the bottom. It went one full expansion but failed to follow through. Second attempt fails. Third attempt fails. This is the same pattern right here that we saw up here. One push, two push, three pushes failure. One push, two push, three pushes failure. So you need to be paying attention. If you're in this trade more than 2 hours and it's not working, you need to be getting out of that trade or taking profits or looking in the other direction for a move counter to the one you're positioned in. So again, Tuesday, we have a swing high, swing low. The market breaks down, continues to push before giving us a new low of the day with the pullback where we had a breakout candle and a pullback into the Europe-London rollover. So we mark off our new low of the day in a down move. We're not at numbers. It breaks down, pulls back. For traders who are used to entering a short trend on a bull candle, this is a one-bar pullback in a very strong trending market at the numbers with a one-bar stop. You're looking for a minimum of a measured move. So again, this market breaks down, breaks down, breaks down. Now we are at the low of the day at the end of the 4-hour window at the New York Open at numbers. We have an engulfment hammer. Traders, this is a textbook setup. You need to screenshot this trade. The minimum target would be the numbers and possibly the swing high. Now, this is where the market has trended, pulled back, and extended the next few hours again down into the open at the low of the session. This is a very low risk, high possibility trade setup with a one-bar stop. So this is, again, very important for you to be paying attention to the timings, to the numbers, and to the low or the high of the day. So we head into the next session. Asia. Again, we mark off our most recent highs and lows. Okay, and in this particular case, the market pushed up, pulled back, pushed up again, pulled back into the rollover. So we've got a stop hunt low, and we have a new redrawn high inside of that high and low. So we have hit the stops, and it goes into consolidation again. Towards the end of the Asian session, we have another almost 50 pip stop hunt through the low of the day, stopping traders out who are at break even from this previous night's low. We also have our redrawn high of the day. So again, think about hit the stops, hit the stops, hit the stops, hit the stops, trend into the session open off the low of the day. So if you come along in the Europe-London Open, we already have an existing trade off of the bottom. So traders are in long, and the first place they're going to target is the most recent high of the day. If you get a hammer at the London Open at the numbers, you need to be thinking measured move, middle of the trend, on its way back to the high, at least the high of the day, and then possibly the high from the previous night's US session. So they've gone down to the bottom, stop hunt, then they're on their way back to hit the stops up top. Hit the stops, pull back, hit them again, pull back, hit them again, pull back, push one more time into the New York Open, stop hunt back into the trend. Okay, each time they give us a pullback or a new high or a new low, we redraw our highs and lows. We want to know when this trend exhausts itself. We get up for the second double top into the New York Open, the end of the four-hour rollover for our 915 trade setup. They go high one more time, engulfment, straight down 50 pips. Through the most recent swing lows on traders who are chasing that trend long, back towards the high, thinking that it's going back through for a continuation of that trend. Again, the next day, we have our most recent lows, okay? And we have our most recent highs. The market gives us a new high of the day. We draw that across, and we have the high of the previous day extending through. Okay, the market pushes up high, pushes down, pushes down, pushes down. We're not at numbers. It's had 4 hours, 6 hours, and it still hasn't pushed any lower. Pulls back, engulfs traders long, giving us a small little W rectangle inside of that Asian range for a stop hunt high. Hit the stops, into the Europe Open, London rollover, hit the stops one more time, pin high, inside bar, engulfment at the previous high of the day with a breakout of that 3-bar reversal pattern. Straight back down, stop hunting traders at the bottom, not only through the low of the day, but through the low of the US session close. So again, pulls back into consolidation, goes sideways, hits the stops, hits them a second time. That's one big move, but we got a 1 push, 2 push, reversal, straight back down. The market again goes into consolidation prior to the US Open. And again, this is where I talk about stay out of the inside. We want to be at the low or the high of the day. The market breaks down towards the end of that 4-hour rollover, breaks out, pulls back, 2-bar reversal, straight up for a 100 pip stop hunt to the high of the day. Again, pin bar at the top, a reversal back inside, one more attempt to follow through, inside bar, 50 pips. And again, we go back into consolidation. Very important to be paying attention to this, traders. I think you're getting the idea, traders. Draw your highs and lows. They hit the stops in Asia. They pull it back. We redraw our high of the day. Okay? They hit it again a second time. Don't take it out. Hit it again a third time. This is the same as Monday. At numbers. Heading into the next session. Stop hunt, 50 pips stop hunt down through the low of the day, but then to the most recent low of the US session close, prior to the US session close. Pin hammer at the end of our 4-hour window. Okay, third candle in our 3rd hour of our 12-candle window at just 1 candle prior to the 4-hour, 1 hour, and 15-minute rollover. Little pin hammer, yesterday's low. 1, 2, 3, pull back, and hit the high of the day. Drop it back down inside of the double zeros. 1, 2, 3, at the end of our 4-hour window, pull back, 50 pip stop hunt to the low of the day. So traders, I want you to be thinking 915, 915. Keep it simple, stay disciplined, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.